you've reached financial independency, you're a specialist, you're a medical doctor, you're sitting on some cash, but you're not 100% sure what to do with that cash. So in this episode, we are going to look at measures that you can put in place, effective measures, how you can preserve your wealth, how you can steadily build that wealth to get to a point of financial freedom. Right up next.
This episode of Money and Medicine is proudly sponsored by the PPS Health Professions Indemnity. For more information on PPS, please do go on our website.
Before we start, if this is the very first time that you are watching Money and Medicine is an unbiased platform where we try to educate as much medical doctors as we possibly can. By the time of this video, we've helped close to 2,000 medical doctors in South Africa with workshops that we do. We do one-on-one sessions with our clients to make sure that you can get informed information, up-to-date, unbiased information out there so that you can make the best decision for you and for your family. So there's a quote that says it's actually, and if you ask many billionaires out there, it's harder for them to keep their wealth or to preserve their wealth than it was actually to make that wealth in the first place. So if you are one of those medical doctors, medical professionals currently sitting on cash, please keep that in mind, that cash, by making one bad move, can actually be 100% deteriorated. So it's important for you to preserve that, to make sure that you build measures in place where you reduce your risk so that you can build compounding interest and a compounding portfolio over time. So if you are sitting in cash, again, just please look at it from a place of preserving a capital. I'm not talking about you're an entrepreneur, you're a medical doctor, you've built up a business, a conglomerate of other businesses. That's a different sort of advice, and that's a different episode that we will do to make sure that you get prudent advice from that perspective. But if you are sitting on cash, you're looking what to do, please understand that cash can go to one out of four places. And typically, if you look at a balanced portfolio, it will flow to one of these four places. First of all, into your own practice or into a business where you know what's going on. You understand. They say that thing, mind your own business. You know what's going on in that business. You understand the values, the core. Please don't invest in something where you've got no clue. If you're a medical doctor and you've never been into farming, please don't invest unless you really trust that person and you know that person, what they're doing. Don't invest into something that you don't understand. And that's a quote by Warren Buffett, one of the, if not the ultimate investor that we know in our time. So first of all, it can go into a practice, which can be your own practice. It can go into businesses or a portfolio of other businesses. Private equity is a smart word for that, where you invest a portion into that. Typically, what I would also recommend is 40 or 50% of your excess cash should go into paper assets or paper investments. This can be indices where you invest in passive investments. It can be active investments, the likes of Allen Gray, Coronation, but make sure that you invest it in such a way that it complements your risk profile. So if you are somebody that's moderate, invest maybe in a moderate or just under a moderate, again, to make sure that you can steadily grow that wealth over time. As long as it performs better than inflation. Obviously, inflation is deteriorating your capital every year. Then you are in a position where it's actually growing and it's actually performing for you. Then I would also recommend to look at perhaps a real estate or a property portfolio. There's a lot of reading and a lot of books on that we would recommend. We've actually done a podcast. You can check out the link right up here, where we had an episode with Prosperity Enterprises on exactly some of the effective strategies that will work in South Africa. Again, I would recommend maybe 30 to 40% of your wealth that can go towards a property portfolio, and make sure that this is an effective portfolio that you've planned for. Please don't invest in stuff, again, that you don't understand. Property needs to be maybe in an area that you know. You need to structure it in the right entity. So if you've heard that someone places their property, as an example, in a trust or in a business, please find out, read up about that. It's your responsibility to become financially literate, and it's your responsibility to make sure that you know exactly what is the financial implications that you are making when it gets to this stuff. And then lastly, cash. Cash can actually be, in so many instances, we've seen cash is king. So if you are sitting maybe on 10% of your monthly excess cash being remained in cash, a money market, a savings account, a fixed deposit, whatever the case might be, you're in a position where if opportunities do arise, you're the first person to actually then channel some of that cash into that opportunity. You can buy businesses at a discount. Currently, at the time of this video, the world economy is really feeling it. Markets have been bruised this whole year. I think currently the MSCI is down like 23%. So it's important for you, if there's opportunities like that and businesses are actually going for a very cheap value, markets are undervalued, it can be an instance where you can release cash into the market to make sure that you are buying these opportunities at a massive, massive discount. Tips that I also want to leave with you if you are building your wealth portfolio and if you are moving some of this excess cash into either one of those 4 categories is, first of all, always try to be tax efficient. So if you look at an investment vehicle, make sure that you've looked at all the angles. Is there maybe another form of this that's a little bit more tax efficient that you can use? And if so, talk to your financial advisor, make sure that you guys make an informed decision and then go for that option instead. Secondly, things have to give you a return, and that return can either be on the capital value or that return can be a monthly income, which is also referred to sometimes as a dividend, or in instance, let's say you've got a property portfolio, as a monthly rent. If it doesn't give you a capital appreciation nor a monthly rent, try to get out of that investment, so to say, as quickly as you possibly can. And then lastly, try to avoid being leveraged too much. And what leverage means is me going to the bank and I'm buying a property for, let's say, R1 million. But I'm not putting in any of my own capital. It means that I'm 100% leveraged. So I'm using someone else's money to try and build a portfolio. Now, the problem is specifically, and we've seen this year, where interest rates continuously goes up. If you're in a situation where you are overexposed in leverages to the point where you can't actually service that debt with one wrong move, it can deteriorate your capital. And remember, at the beginning of this episode, we spoke about trying to maintain capital and trying to maintain and preserve your wealth. While being overexposed in terms of leverage can really quickly deteriorate that. So try to manage that. Don't try to go too quickly, too much. And that is very important when you start looking at building a portfolio. Well, that's it for this episode. If you have enjoyed it, please hit the thumbs up. Please share this with colleagues and friends that you feel might make use of this episode. And I also want you to watch 2 episodes. Firstly, this one where we speak about being a dominator as a medical professional. So we've taken the best tips and trades of some of the clients that we've serviced, some of the people that we've helped and mentored, and we've applied it in an episode that you can apply specifically today to start adding value. And then this episode where we speak about asset classes. So there's 4 main asset classes that one can invest in. Have a look at that episode and I hope it will add value. Until next time, plan the plan.